I mean, the deficit expansion has been dramatic.
Now is not the time to worry about the national debt.
Actually, running budget deficits is a good thing.
Debt is not something that the general public should be worried about for the time being at all.
I think what we have to remember is that the deficit expansion was happening even before COVID hit. So we were seeing, in a way, on an unsustainable path for the deficit. And then obviously once COVID hit and we had this incredible amount of support from Washington that is ongoing, deficit continued to swell. So, what's the concern? I think the concern is what happens on the other side. So once we get past the crisis, do we start to see some efforts to rein in the deficit, shrink the deficit, and what does that mean for, reduction in spending? What does that mean for policies going forward, especially since we do have a, potential change of government? There's lots of moving parts in terms of how to think about the budget going forward. But I think for the time being, the consensus very much on both sides of the aisle is for more deficit expansion as we do what's needed to stimulate the economy.
Even though we've been running budget deficits that are kind of stupid, if you were going to run budget deficits, you should be using the money to build infrastructure, to help education, to work on the future, and instead we've been using it to give big windfalls to corporations and rich people. I don't want to say debt never matters. I'm not going to go all that way, but interest rates remain low. There's no sign that the markets are disturbed. The arithmetic of debt is really encouraging because interest rates are well below the economy's normal growth rate, which means that that increased debt really doesn't require that you make any special sacrifices to pay it down. And historically, advanced countries, Britain came out of World War II with debt that was 250% of GDP. Nothing bad happened. So there really is we're not anything like at a crisis point. And at this point, with everything else going on, the great danger is that we spend too little, not too much.
In a sense, we'll never have to repay that debt. The American economic credit is good. It's going to continue to be good. Even if there is a huge crisis in the world, American debt is something that's one of the safest assets to hold. So nobody is going to come and say, please reimburse the debt that you owe me.
When you have this much unemployment, when you have this much underutilized capacity, this is the time when government has got to be the spender of last resort. We know this. I mean, even people who don't like Keynes and and rejected Keynes, this is where Keynes comes in. This is where Keynesianism is most applicable. If you don't do it, we're just going to continue to sputter at 80 to 90% of capacity for on and on and on.
If we are going to take our debt from $25 to $50 trillion, that is when U.S. sovereignty begins to become at risk because other countries see that we've run up so much debt that we're no longer beholden to anybody else but the kindness of strangers. And at that point, you start to have real discussions about the sanctity of the U.S.'s dollar reserve currency status. And I don't want for my children and grandchildren to be faced with those issues. I would rather that the Congress people in Washington, D.C. act like adults.
I mean, I think by definition, the enormous amount of debt created is in itself another one of the massive uncertainties out there. I'm advocating also for many countries that this is an opportunity for the governments. It's a bit trickier again in the US, but in those countries where there's independent central banks, from a legal perspective, and the US could do this, I guess, but it'd be a bit trickier because of Congress. You essentially give them a different target instead of just inflation targeting, to one of nominal GDP targeting. It was very intellectually fashionable to debate about this, a good 10 years ago, and it never happened. But a great way of trying to ensure that debt to GDP ratios do come down is by forcing the central bank to have something other than a low inflation target. And part of that would be deliberately trying to probably target higher inflation in a modest way than we have today, but it would oblige the central banks to pursue very friendly monetary policies for even longer than we have now. So that would seem to me to be a really logical way to try and deal with the debt problem. And then beyond that, some kind of clever domestic versions of a sovereign wealth fund where you're trying to convert some of this debt into equity as we go forward. Because otherwise, at some point, it would seem to me that the sheer scale of this debt is going to end up being some kind of problem.
We need to think of the debt. Are you creating money for real economic activity? If you're doing it just to give somebody money, then yeah, you got a problem. But if I'm a private individual and I go to the bank and say, I got this wonderful new idea, I just need the money to build my factory, nobody says, oh, that's horrible, you just increased the money supply. Because we all go, yeah, but there's a factory there. It's a real thing. If the public sector says, we need to open schools, we need to pay teachers, we need to have kids in the classroom, we need extra bus drivers in order to run split shifts for the school, we need computers in order for the kids to be able to do distance learning, there are real things, real economic activity tied to that. So that's not really different. And so I don't think it's as big a problem as people make it out to be. Ultimately, all of these decisions do make some people very rich. And this, again, people want to act like, oh, I made it myself. No, there are a bunch of policy decisions that get made. If the federal government says American kids need to continue education, we don't have enough computers, you're going to make somebody rich by deciding we're going to go out and buy millions of computers in order to have an educated workforce so that our economy can be competitive. It's not a stupid decision. It's a smart decision, but you just made somebody rich. And it's not because they came up with some new idea or whatever. It's because we made a policy decision. This is what our country needs. So I think people have to get used to the idea, you know what? A lot of our decisions make a lot of people rich. Got to pay.
Well, I think, first of all, there needs to be a bit more sharper thinking about what we're doing. It's absolutely the case, to my mind, that government is big and is going to get bigger. We already have a situation where welfare payments in Europe and the United States combined is 90% of world welfare payments. I think government is going to also have not just a bigger role, but a more important role in terms of the economy, both in terms as an arbiter of capital and labor. And we're seeing that government is bailing out industry. Government is earmarking or targeting capital towards different projects. We're seeing in the United Kingdom, for example, the government step in and pay salaries in the labor market. So to me, government is definitely getting bigger. But also at the same time, which is quite worrisome from my side, is that we're seeing corporations and the private sector shrink. In terms of publicly traded companies, in the past 10 years, we've seen that number of come down by about 50%. We're seeing much more concentration in sectors. The idea of companies are becoming much more oligopolies. So whether it's the technology sector, banking sector, pharmaceutical sector, airlines, energy sector, I mean, there are fewer and fewer competitors in this space. And so again, there are real questions about what fundamentally happened. So, I'm being a bit long-winded, but just that is the backdrop that we're dealing with. And it seems to me that we can't all just defer to government given their own fiscal constraints. I think it's really going to be important to try and engage the private sector as we've done before, but really help get the private sector involved in a manner that's not just for the financial shareholder, much broader for the stakeholder, given where we are. And that means that more private sector engagement is required.
The first rule of crisis is, in crisis management phase, don't let the perfect be the enemy of the good. Because by the time you figure out what the perfect is, it's too late. And that's absolutely right. But there's a second rule, which is continuously learn and continuously course correct. Because while you may not get to perfection in the beginning, when you do the good, you may have unintended consequences. You may have collateral damage. So be willing to learn and adjust as you go along. And we tend to forget. And that's why I said, the biggest mistake we made coming out of the 2008 financial crisis is that we won the war against the threat of a global depression, but we lost the peace. We failed to establish high, sustainable, and inclusive growth. And our economy got weaker and weaker and weaker, and our financial system got more and more distorted because central banks couldn't exit. This time around, it's really important that we both win the war and secure the peace. Again, it's not an issue of engineering. It's an issue of implementation.